We are at such a critical point right now that frankly, I do not think anybody has any time to waste. There's a big experiment going on. I mean, several big experiments going on. But there's huge experiments in our monetary system, and they are being transitioned. And if you want to have something to transition into the new system, you better have something right now that's out of the system. Because if it's in there, it can disappear, boom, just like that. The problem with the debt, it is short term. When you have debt, you either have to service it, you have to default on it, or you have to roll it over. So it's that rolling over part that becomes a challenge, and then that leads into the default part. And also the servicing, okay, with interest rates at zero, you can take on a lot more debt for the same amount that it costs you to service higher interest rate debt. So in theory, starting in 2008, but again in 2020, the theory was for corporations, not individuals, not savers, but those that have a lot of debt, is you drop that interest rate down and then they can pay off a lot of that higher interest rate debt. But what happened was that corporations just accumulated more debt instead of retiring and paying off that old debt. And they did it at very low interest rates. But the problem is that these corporations now have to roll over the debt at a higher interest rate, which costs them more. And they have so much debt, we already have the growth of the zombie corporations that has gotten larger and larger and larger, even in well-known names, right? So the big problem with the Fed being able to raise the interest rates, which is deflationary, is that these corporations that could hide their problems and the fact that they were not really earning enough money. I mean, a zombie corporation does not have enough cash flow to cover the interest payments, let alone any of the principal payments for at least 3 years. And so how do you think that would impact them if they have to pay more for this debt? And if you realize that they can't pay it, then you're going to demand even higher interest rates. And this is a big problem. The smart money is accumulating. And so when I see that leveling off, and we can go back to 2016, and you'll hear me talk about this, you know, do I know exactly when the very bottom is? Of course I don't. But I think you can see that pattern. And that's when I'm going to start accumulating, when I see that formation happening, because it's building a very strong base. And all I'm really looking to do in any asset is get in somewhere near a bottom, right? That tells me, that cup formation tells me that we are somewhere near a bottom. And I don't care what asset it is. When it is time, when we see that accumulation pattern, that's when you're going to start moving into that asset. With gold, because now you could say, well, we already had the cup and, you know, and it's 1800 and maybe I shouldn't be buying it now. Except that what we know, when I take that cup formation and then I put it with the true fundamental value, so that's a calculation, right? That helps you understand when that trend is done, right? But as long as I see that it is severely undervalued, which I know absolutely for a fact, 100 bazillion %, both gold and silver are severely undervalued because of what's happening in the monetary system.